Good morning all and welcome to this first episode of this new series of Last Orders on Friday with me, Gaz, Analyst for Learning Crypto. As explained on Monday, this is a rolling series, so Monday markets and Last Orders on a Friday. Monday we're going to take a look at what could potentially happen in the week, and Friday we're going to review what did happen. So on Monday we were talking about the possibility of a generous CPI print leading to a Bitcoin rally to 19k, and as you can see we have slap banged hit 19k pretty much on the nose. You can see we've got this weekly level of resistance here marked out at 19k, which we've come up and hit. Obviously this was previous strong support all the way through last summer, so you would have thought it's going to be a pretty tough nut to crack. We'll have to wait and see. There's obviously a lot of momentum going in from last week. The CPI print pretty much came in as expected, so no surprises there. And the subsequent rally. Now, words of caution. So obviously we've had this pretty impressive rally. We're slap bang into some pretty hard resistance, and not only that, but we've also got some resistance on the S&P, so the ES S&P futures. As we talked about on Monday, we've come up and tested this weekly level, this weekly bearish trend line rather, and so it'd be interesting to see, do we break through it or do we reject and make another lower high? The other thing we've got to watch out for, if we go and have a look at the VIX, so volatility index, so the phrase you want to remember when looking at the VIX is, when the VIX is low, look out below. When the VIX is high, time to buy. And one really good example of when the VIX is high, time to buy is this huge spike here, March 2020. I think we all know what that was. All right, so if we take a look at the VIX and its previous lows, I've highlighted them here. And if we go into BTC and zoom out, you'll see they correlate quite nicely to some previous highs. So if we go through them quickly together, so this bottom here around about early to mid-August, if we then flick to BTC, you'll see that was the top of this last bear market rally from June to August. You can see we topped out just there and had a big move down. The next one, we've got this bottom here at the end of March 22, flick to BTC, and again you can see that marks the top of this bear market rally, end of March 22. Next one is this one here, end of December, start of January. So end of December 21, start of January 22. And you can see that marked that top there, that little Santa rally we had end of last year, or well, technically the year before now. And then next one along is, we did that one. So this bottom here, so end of October 21, flick to BTC. End of October 21 is just literally right at the top. So this one was slightly delayed. So if we quickly just pop back to the VIX, end of October, start November, you can see. So the last bottom was basically 4th, 5th November. If we go to BTC, the top actually came at about the 9th of November. So we had this one little last leg up and then obviously a huge leg down, but pretty much marked the top of that rally. And then last one is just this bottom here. So late June to start of July, and then flick to BTC, it was the top of this little rally here. We had just there at 29th of June, and then we went down and bottomed at 29k before that huge second wind in the last bull market. So as you can see, zoom out, you can see that the when the VIX is low, you could be in for a bit of a drop. The only one that doesn't quite correlate is this last bottom here we had on the 2nd of December. And in fact, BTC had a little rally around the 2nd of December, I think. It sort of went sideways and then a small pop. But apart from that, more often than not, it's a time to be cautious. And as I say, we're right on some resistance on BTC, right on some resistance at the S&P. So yeah, a word of caution. And going back to what we were looking at with ZIL and ADA, it said that these levels of resistance that we marked out, a good area for taking profit if you've made some. If you've bought lower in the past month or two and you're sitting on a load of profit here, definitely take some. I'm not saying sell your entire bag. Obviously, nothing we say on here is financial advice, but take some profit off the table, because if we do end up dropping from here, you'll be gutted that you didn't, and you'll have more money to play with if you do take those profits. And also, you never go broke taking profits. So as we said on Monday, really nice area to take some profits here. It was a monthly level of resistance, and we've got this bearish trend line as well. And as you can see, we've rejected off that area quite nicely. What day was this? Was this Monday? Oh, so it was actually on Monday that we said could come up for a second bite of the cherry. Who knows? But as I say, pretty decent level. And then ADA in a very similar scenario. We take a look, clear level of weekly resistance that we've come up to, I mean, right now, actually. So, as I say, if you're sitting on some ADA profits, no harm in taking some off the table. Not necessarily the whole bag, but just take some off. If we do break above and hold this support, your next level is going to be this weekly level around 39 to 40 cents. And watch out for that bearish trend line as well. So, let's also not forget today we've got the earnings coming out from the banks as well. So, the volatility might not have finished, but just a word of caution: don't get too carried away. Don't go buying resistance. Wait for a pullback. Hopefully we get one, and we'll go from there. So hope you've enjoyed this first week of the series, Mondays and Fridays. Obviously, subscribe if you want to keep updated and know when the videos are coming out. But have a good weekend, and we will see you on Monday morning.